All right, good afternoon, good evening. Welcome to today's live recap. So today is going to be a special one because we have a EminiPlayer member, another trader, who will be sharing some of his insights and ideas on how we can all get better at trade execution, what allowed him to make the turn and improve his trade execution. So I'll be bringing Ed on a little bit later into the recap. But for now, let's kick it off. So heading into the open today, we knew that we had bearish time frame alignment where the short term, intermediate, and the bigger picture were all now bearish. But just because we have bearish time frame alignment doesn't mean that there cannot be a bounce on the day time frame, right? As day traders, we always have to be aware and mindful of that real-time intraday situation. And keep in mind that in order for ES to continue selling off, we would need to see signs of initiative selling in real time, like any other day. You know, if you're opening below the range of the prior day, in order to sustain those lower prices, we need to see signs of initiative selling. And we didn't know, of course, where buyers would step in. They could step in at initial support, maybe at the next zone, or possibly even lower. It's anyone's guess where buyers are going to step in. But in real time, if we notice upside momentum, or if we notice a momentum shift back to the upside, then we have to understand that the bearish pattern or the bearish bias can remain in play even if ES pops all the way back up into the bull bear zone. So on the upside, we were using that 39.46 to 54 half as the bull bear zone. A breakout above it would be an intraday bullish indication. And then in order for us to get a bullish confirmation, and if you recall, the bias confirming zones are critical. You know, just trading above a zone is not enough. Trading below a zone is not enough. Typically, you have to take out the zone where it says breakout equals intraday bullish or bearish, and also take out the zone that says breakout equals intraday bullish confirmation. That confirmation is a keyword that you always want to be aware of. So on the upside, the intraday bias confirming zone was 39.60 quarter to 66 quarter. And the bull bear zone is going to help us kind of figure out, okay, is the bearishness still in play? What I mean by that is if you break out above the bull bear and you take out the 39.60 quarter, 66 quarter area, that would give us a intraday bullish confirmation. But let's say that the market's exhausted by the time it takes that area out, and then it pulls back to the bull bear zone, and then it holds the bull bear zone, right? Well, and then starts trading back above 66 quarter. That would be a very strong indication that now the environment, perhaps at least for the time being, is shifting. But as long as we're holding below the bias confirming zone and below the bull bear zone, the bearish time frame alignment can remain intact. And on the downside, like I said, you know, buyers could step in at any of these areas. And given that we had bearish time frame alignment, we would have to be extra selective or even avoid the long side and focus more on the short side. So that being said, let's jump into the chart and see how it played out. So early in the session, we can see that the market pops up into the pre-market resistance zone, pretty much holds it to the tick. We also have the 24-hour VWAP right above the zone. So a relatively safe way to trade that area is to short it in the middle or even the back of the zone and then put your stop a little bit even further outside the zone to give the trade some room to work out. And because it is the pre-market resistance zone, it is the more aggressive area of resistance, it's not going to hurt if you give it a bit more room. You know, you don't want to follow just 1 point beyond the zone type of thinking because that's very mechanical. You know, the stop placement should be at least a point beyond the zone, but that's the minimum. You know, there's no rule that says you have to stop there. You can give the trade more room to work out, and the more room you give it, generally, the higher the odds that you won't get stopped out prematurely on just a little wick outside of that zone. So that is a valid trade idea. It is a little bit more aggressive because the location is aggressive. And given that it's an aggressive zone, if you're taking it towards the back of the zone, that's one way to deal with that, right? We already know that it's an aggressive area of resistance. One way that we can counter that is by securing better location within the zone and then using a slightly wider stop so that even if the zone gets taken out by a little bit, we don't get stopped out prematurely. And then on the downside, we can target the pre-market support and the initial support zone. Now, the market did not have to turn around from initial support, given that we had the bearish time frame alignment. In effect, it could obviously have gone lower, but in this case, buyers stepped in at initial support and we got a push to a new intraday high. So this is where we have to assess the real-time situation and we have to make a determination on whether we are seeing signs of initiative selling. Are we seeing a downward trending and very negative advanced decline reading? Is the NYC tick completely holding below zero and printing nice downside values? And if it's not, then we need to adjust. I think that when the market pops up here into the 24-hour mid, it's still a good enough shorting opportunity because we don't have clarity yet on whether the market is simply bouncing off a exhausted or oversold condition, or are we truly seeing a lack of initiative selling? That becomes more clear when we get the breakout above this level, above this swing high. Up until that point in time, there's still potential for the market to head lower. So I think that if you took the trade at pre-market resistance and scaled out, perhaps you adjusted your stop, the 24-hour mid area with your stop loss up at initial resistance would still be a valid idea because of the bearish time frame alignment. And of course, if you are trading initial support on the long side, which I know some traders did, then you would want to, at the very minimum, scale out at pre-market resistance and the 24-hour mid. Now, we can see that this ends up turning into a opening range breakout idea, and it is essentially an intraday balance breakout outside of this range. So we can use the fib tool to get at least a rough estimate on where the market might end up going if it puts in a successful breakout outside of this intraday balance. It's a repetitive process, right? This is not like a unique thing just to set up. Anytime you have a balance area, you can measure it and get at least a rough estimate of where the market might go. Doesn't mean it will get there. That doesn't mean it will always get to the 100% range extension. Of course not. But it gives us an idea of what is possible. So when we get this breakout above the opening range, we know that, hey, it could expand the range 50% quite easily. And it could even expand the range 100%. That's very much within the typical behavior of that pattern. So that means we have to be mentally prepared for ES to go up and through initial resistance. So the benefit of drawing this and being aware of the range extensions outside of the balance is perhaps it forces you or helps you secure better location on your next shorting opportunity, right? Maybe you don't short the front of initial resistance anymore because the market is putting in a balanced breakout outside of this range, and because we are now seeing clear signs of a lack of initiative selling. So that means that the market may not be going too much lower, right? Now, in order to trade this successfully, I think we have to have the ability to hold multiple pieces of information and patterns in our head. So we cannot lose sight of the fact that the short-term and intermediate-term bias can remain bearish below the bull-bear zone and even below that bias confirming zone up near the 60 quarter to 66 quarter area. We have to be aware that the overall bearishness can remain in play below that zone. And if we've done the work on measuring the balance that we're breaking out from, then we'll be prepared to still take the short setup up here. So you want to be more careful at initial resistance because again, even the 50% extension can take you higher. Now from there, we can see a market pulls back, holds the opening range breakout area, the broken pre-market resistance, and then makes one more push beyond the first hour high into the bull bear zone and the bias confirming zone. Now, because we have bearish time frame alignment in effect, we should be more aggressive on the short side. That's the whole point of having a bias, right? Bias doesn't tell you where the market's going to go that day. It just informs how we are going to approach execution. Which side are we going to be more aggressive on? Which side are we going to prefer? Well, that in this context is going to be the short side. So as ES pops up into the bull bear zone, and especially that next bias confirming zone up at 60 quarter, those are both very good spots to attempt a short. Now, there are a couple of ways that you can do so. You can either short the bull bear zone and use a much wider stop and risk 2R on the overall idea, or you can short here, take the stop out, and then short again, and now you're in an excellent trade. There's never a guarantee that either is going to work out, but at least you're in a sound trade setup, right? It's in alignment with the bearish bias across multiple time frames, and even though, yes, you are going against momentum, you are now securing ideal trade location, because this is a very key spot. If the bearishness is going to continue, this area needs to hold. So it's a critical spot, it's a significant inflection point, and that's why we have to have a resting order to take that trade. This is not something where we need to wait for the market to get there and then we think about and deliberate on, hey, should we take it, not take it? We know it's a roll of the dice. We know that with every single trade setup, there is no way to know the outcome. So what are we left with? What can we do? What's in our control? It's the process. That's it, right? Your risk management, your trade setups, the rules that go along with that, and that entire thing kind of builds your trading process or trading system. So that is what we need to focus on. Not was it a win? Was it a loss? Just follow the process. And now as the market is approaching this area, you may even want to front run that zone. You don't even have to wait for 60 quarter. If you've done the range extension over here, then you know that even 59, 59.75, like that would be a very good spot to short as well. So you don't even have to wait for 60 quarter because you don't want to miss the trade, right? I would rather get in at 59 or 59.75 and use a slightly wider stop, because if the market fails there, then we can just go right back down to lows or even make new lows, right? That bearish time frame alignment is a very powerful idea when applied correctly. So this is a critical trade that in this environment, under these conditions, in this context, must be taken with a resting order. Again, you don't want to click into it when it gets there, because then even if you caught the trade, by the way, by clicking into it, you are risking not getting it. So make use of resting orders. And, when there's an ideal opportunity available, don't hesitate and don't, try to get the absolute best price and the absolute high tick on that trade. Good is good enough when you're dealing with a idea that has high reward potential and really decent odds of working out as well. So over here, we have a great shorting opportunity. And now as the market starts dropping, it's important to not only recognize that, hey, that's a great entry, but recognize that because it's a bias confirming zone in a very bearish environment, your targets should be more aggressive as well. We're willing to front run that zone because it's the critical inflection point on a day where we have bearish time frame alignment. So that covers the entry side. But to truly maximize the opportunity potential, we also need to extend our targets out. This is not a trade where we get in here and we take a quick little exit at the first hour high. And, that might seem like it's a nice trade. It's, about almost 19, 20 points. Might seem like a nice trade, but that would be really short-circuiting it and not recognizing the true potential of that trade, right? So even if you took the trade and you got out very early, that is still a reason to reflect and think about how you could have managed that better. It's okay to scale out around 41 or around, this broken resistance. Scaling out is okay because the purpose of the scale out is to reduce risk. It is not to maximize profit. That's its job. The scale out is purely for risk reduction. And we know that there's a cost to scaling out. And when the final target is quite far away, the cost of scaling out is going to be higher as well. So, we should know that, but it's okay if your goal is to reduce risk. So we take the short here as it moves down, scaling out is okay, but now recognize that, hey, the high might be in. We might be going down to the broken pre-market resistance or the pre-market support or possibly even lower. But the idea is that you want to get a more extended target out of it. I would say at the very minimum, you want to look for a move down into the broken pre-market resistance area. And if you got out a little bit ahead of that, if you got out at the 24-hour mid, still a pretty decent trade. But of course, if you can maximize it, get more out of it, that is going to serve you much, much better. So I think, pre-market support, broken pre-market resistance, both of these are very good spots to consider covering. Again, we're not looking to go long at pre-market support simply because in real time, the momentum is now quite bearish. And again, we have bearish time frame alignment. So who's to say the market's not going to go lower? So we're not looking to trade the pre-market support zone anymore. And we would much rather use it as a spot to cover and take profit. Now from there, we get a bounce back up into the initial resistance zone. Now that zone has already been traded on both sides, so we can't really lean on that zone anymore. If you are looking to short yet again, you would have to be aware of what's happening in real time. You'd have to essentially figure out, hey, where would I even place my stop if I'm looking to re-short? And then your location would have to be good enough where the target and the stop still give you at least 2 or 3 R on that trade. So looking at this, intraday price action, there are a couple of things that we can do to get a better idea of, what's kind of a good enough spot to consider shorting if we're even going to short it again. And you don't have to. If you've captured the swing, you're golden, right? You don't have to short it again. But if you are a more active trader, if you're looking for, to trade multiple opportunities, you still want to do it in a very structured way. So looking at, what has happened up until that point in time, we can see that a move back up here falls between the 50 to 61.8% retracement. We have the first hour high at 41. We have a false breakout pattern that took shape above the first hour high. Market dropped back down, struggled a little bit around 38, 39, and then rolled over. So if you are going to short this pop into the 50 to 61.8, you probably want to have your stop at least behind this 38 half area. And of course, the more room you give any given trade, the better it's going to be. So if you want to be safer about it, then the stop can go even beyond the first hour high. Because in reality, the market could have popped a little bit higher and then turned over. As long as we're holding the high of day, the bearishness can continue. So, shorting middle of range is obviously going to carry more risk. It's going to require a wider stop. And of course, it's going to have more limited reward potential as well. So, this is not something that we necessarily have to be involved in at all. We can just focus on the ideal setups and not really even bother with the middle of range stuff. Now, in this case, we can see market pops up, fails at the 50 to 61.8, and then eventually rolls over, goes down into initial support and the next zone, and that's where finally the market stabilizes and we get a pretty decent bounce. Given the time of day, given the bearish time frame alignment, I'm not really looking to trade this area either. If you want to trade it because it's overextended or you think, well, if it works, it's a neutral day, we can get a pop back up into perhaps, the mid VWAP area. That's understandable. It would be okay. Anytime you're getting good location, especially after exhaustion, the trade idea is usually okay. But is it great? Given the circumstance and given the context, probably not. So looking back at what happened, where are the ideal setups? So we have short opportunity off of pre-market resistance, 24-hour mid, and then bull bear and the bias confirming zone. Those are the best trades. And it's not because those trades worked. It's because those are the trades that were really in alignment with the method and the system, and they had the most going for them. Like from a location perspective, you're not going to do much better than 39.60 quarter. That is the ideal spot. So that's really the trade of the day. There are other opportunities along the way. There are so many different patterns that we could talk about, but let's just focus on the 2 or 3 setups that were within our reach, that were relatively straightforward to execute, and you could take them with a resting order. And I think those were it. Now, as we head into overnight, the context really hasn't changed much. On the upside, that bull bear zone and the 39.60 quarter, 6.6 quarter are going to continue to be key. As long as we're holding below that area, technically we are still balancing at lower prices and the recent breakdown can remain in play. But if we break out above today's RTH high and above that bias confirming zone, then at least for the time being, the bearishness might be shifting and the buyers could regain control, at least on the short-term time frame, and we might end up heading higher and testing some of the upper zones. On the downside, a break and hold below today's low and essentially below the 38.55 support would be another bearish indication now, and that could then bring lower zones into play. And on the downside, the 38.06 quarter, 15.75 is a very good spot for buyers to step in. So that is how today ended up playing out. Now I'd like to bring Ed on and pick his brain a little bit on trade execution, because that's really where the rubber meets the road, so to speak. And Ed had an excellent day today. He, I think, was up 7.6 R, which is an absolute home run day for anyone. So without further ado, let me hand it off to Ed, and we'll probably end up going a little bit back and forth. But Ed, if you just want to introduce yourself and maybe just give a brief background of yourself as a trader, and then let's jump into maybe 1 or 2 trade ideas that you found to be very attractive, but not just the ideas. Let's get into the mindset and what's needed to actually execute and maximize those ideas.
So one of the biggest factors that helped me kind of go over the hump in the execution is what AB refers to, I think, as a delta factor, or the delta in the lost opportunities of trading. And what he means, or what I mean by that, is if you don't take a trade, it's not so much that you just don't, you could take the trade and get a -1 R, that's all you're going to get. But if you don't take that trade, you actually don't realize that 2 to 3 R profit. And let's say you missed 2 trades that could have gotten you those 3 R trades, and you could have gotten 6 R, but because of fear or because of whatever was going through your head, you missed those trades. And at the end of the week or at the end of the month on your P&Ls, you could have possibly missed, I don't know, 10, 12, 15 R because you didn't take 3 or 4 trades that you were scared to take. But coincidentally, you took those garbage trades that resulted in a bunch of 1 R losses because you were revenge trading, as I know a lot of us do, because you missed that big move. And I think that delta value holds true to me when I see a trade and I think, okay, if I don't take this trade, I'm going to be missing out on a 3 R trade. And I'm taking all these garbage trades, which leads me to my second idea. And I'm sorry, I'm talking fast. I'm trying to get through this before my thing dies. But the second idea I have is what AB said a long time ago, well, not a long time, maybe even last week, 2 weeks ago, but he said all this stuff recently, is if you don't take this trade, then what trades are you taking? And I'll give you an example, like the bias confirming zones. If you have a problem taking those trades, then what other garbage trades have you taken in front of this really good trade that you're skipping out on? And so I've taken some garbage trades where, it just was flat out Momo and I didn't want to miss out, or I'm chasing the price action or whatever it is I'm doing. And I remember those trades and I just shake my head because they always result in losses. And then I skip a bias confirming zone and I'm thinking, why didn't I take that trade? You're taking these garbage trades, but you can't take the most obvious trade. And so that's another thing that goes through my head is like, when I look at the trade, I compare it to the other trades that I've taken, and I go, okay, there's a bias confirming zone here, like the bull bear zone. That's if you followed the Open Trader or the mentorship, that's an automatic trade in the bull bear zone. You put your entry at the front of the zone and you take it no matter what. I didn't like the trade at all. The way the price action was going, it formed two different balances, one on top of the other. It was breaking out into the bull bear zone. I didn't like it. I still took the trade front of the zone and I lost. But I'm not mad at the outcome because it's the process. It's because I followed the rules. I took the bull bear zone, front of the zone. I lost. It's okay. Because 9 times out of 10, that's going to work out. So I took the zone behind that, the bias confirming zone. That's another trade you guys should be taking. That's not the large time frame, bias confirming zone, but it's an intraday bias confirming zone. But below that 3961 area, nothing structurally changes, right? You're still in a triple alignment bearish area. So you have to take that trade. That's another automatic trade. So if you're not taking that trade and you skipped out on the bull bear zone, you kind of have to compare it against the trades that you have taken before and ask yourself, well, if you're not taking those trades, what other garbage trades are you taking? And I have a saying, a quote that always rings in my head every morning. I think about it. Scared money doesn't make any money. And so if you're scared to get into the market, you're not going to make money. And that usually results in, just in my trading, is I'll take these garbage trades because I'm so pissed that I missed the most obvious trade that I start revenge trading. And I know, that's super bad, but I know that's just how I am. So I know that going in before that trade, and I go, you know what? I'm not going to revenge trade. I don't want to get in that area. So I am going to take that trade. And if it doesn't work, I'm much better off with a -1R trade than missing a 3R, 5R trade. And that's what goes in my head before a trade. So I'm like, am I okay with the 1R trade? Yes. Am I okay with missing out on a 3R trade? No. Take the trade. It's just that simple. That's just allowed me to be more aggressive in my thought process. So like even today, I was telling my trading partner, Nick, I was like, hey, he's like, what are you going to take? And I said, well, I'm taking their pre-market resistance. I'm going to take the initial resistance. I might skip out, but I'll take the 39.35. I'm going to take the bull bear zone, and I'll take the bias confirming zones. Well, I took some of those zones and they stopped me out, and it's okay. I'm okay with that because before the day started, I told myself that I'm okay with a -3R loss today. I'm perfectly fine with that. And I put it in my head that it could happen, but it's okay because the opposite of that is I could have a +10R day, right? I could have a +5R day. I could have a big day. So it's the whole risk to reward that, this methodology teaches, right? It's I could have a -3R day, or I can have a phenomenal 7R day. And that's what prepared me to take those trades ahead of the open. I was already prepared to take those losses. And I took them quick. The pre-market resistance, that was kind of a lucky trade. But I won't go into the specific of the trade because, AB does that all the time. I'm just going into the psychology. I wrote notes, so I'm trying to go through the notes. prepare yourself on the trades that you're going to take. And what I mean by that is you have to know which ones will have momentum against it. So if you're going to take a bias confirming zone and it's dropping 100 points, you already know that the internals are going to look like shit. You're going to have momentum against you. Everything's against you. All the markets are falling. Everything is falling. But if you already put that in your head before the day even starts and go, okay, we're starting over here, that bias confirming zone is either way up here or way down here. All the internals are going to look like garbage going into that. So you should filter that part out. So even when everything looks bad, it's a pure trade location trade, right? It's just location. Everything else is going to look like crap. You got to take that trade. If you don't take that trade, what trades are you taking? And so again, that brings that to that second point on, it's you have to compare your bad trades with your good trades. The other one I always think about is the psychology of trading. And that's, I think, what's holding back 95% of traders is AB goes through all these recaps, coaching webinars, and just to me, they sound just like a broken record. It's always the same. But there's every now and then he drops these bombs, like when he talked about the delta factor. He's talking about comparing trades. If you're not taking this trade and you're taking the garbage trade, then what are you doing? So he drops these bombs, and most of us struggle with the psychology of trading. So instead of trying to improve your reads, which you should do every day, ask yourself, just sit down and just ask yourself, why are you scared to take this trade? What is it that's holding you back? And if you're not taking the obvious trades, what's holding you back? I think with that, you have to kind of tackle that area before even going back in the market. You could switch to sim. I know sim is not the same, but what I would do is switch to sim, trade for 2 weeks or trade for a whole month, and see how you do, and compare that with your real life process. And if your sim is phenomenally better, then it's the fear that's holding you back. It's not your execution or your market reads or any of that. It has nothing to do with that. It's just the fear that you don't want to take this trade. And remember the delta factor that I said before. If you don't take just 4 trades out of the month that are good, and they're 3R trades, that's 12R, okay? So at the end of the month, you're going to be minus 12R. That's that delta factor. So if you put that in your head, if you miss those 4 trades because you didn't want to get a minus 4R, or minus 1R, it would have resulted in minus 4 if all of them didn't hit. That's fine. That's still just minus 4R. But if they all hit, that's plus 12R. So that delta factor of not taking the trade, missing that opportunity, is going to reflect in your balance sheet, and should reflect. If you go from sim to regular, it'll show night and day. You'll see it. And I think that's kind of feeds back into what I'm talking about, the psychology of fear. What's holding you back? Just think of that delta factor. Think of that, the fact that if you mix this trade, you can skip out on a potential 3R. And if it breaks, so what? It's a minus 1R. If it breaks again, so what? It's a minus 1R. Don't think of it as a bad day or a bad week. Think of it as a whole month. So, my partner, he tells me, well, shit, you had a 5R day or a 7R day. You had yesterday at a 5R day. It's great. Yeah, I have this padding, but I don't think in terms of having all that ammunition padded up. I think of every trade independently of each other. So if I take this trade, I don't think like, okay, I have like 7R for today. I can afford to take this trade. I'm more aggressive. I look at each trade independently. And that's just how I look at things, because I look at things from a monthly, a quarterly, yearly, of how you do. So I'm okay with having a minus 3R day for today, because I know in the long run, it's going to work itself out if I take enough trades, right? The 3R trades, if I take the good ones. The other thing I look for is, can you guys still hear me too? AB, can you hear me?
Yeah, all good.
Okay. The other one I look at is, I know we make fun of this, but I always look at what trades AB would take. And so if you've been with him enough and you've listened to his recaps and, his coaching webinars, sometimes it's obvious which trades he's going to take. So I'm looking at this trade going, okay, this is a trade he's going to say he's going to take. It's a balance breakdown. It has everything going for it. He's going to take this trade. I need to take this trade. And at the worst, it's a minus 1 hour trade. It's not a big deal, up to minus 3R. It's not really, it sucks. It puts a damper on my day, but I always look at the long run. So I think, with that, if you've heard enough of his recaps and you're like, damn, I missed that trade. Damn, I missed that trade. He just went over it yesterday and I missed the same exact trade, which he's done before. At what point are you going to engage? Are you just going to keep watching the recaps? Or are you going to, at some point, on the recaps? Because if you're just watching the recaps and you're not executing on his recaps, then you're just watching, but you're not really doing anything. And I don't know if that's even good. That's just another question in your head. Like, why aren't you doing the things that he's doing in his recaps? It's a monkey see, monkey do. You hear it a million times that he says things, and you should be able to execute on that. The one of the other ones is I get aggressive when the opportunities are presented itself. So yesterday, I got that, everybody else caught that bias confirming zone coming off of that 50 area in the pre-market. And it was a great trade, right? So I was kind of like, I just didn't want to trade anymore. I was like, I was good, So I was kind of lost in the market too. The market was doing some weird things that I just didn't like. And then it started forming this balance. And when I looked at that balance, I'm like, God, that's a great balance. And I think it was at the 4,000 level that balance was there. So I was like, this is such a strong level. I'm going to take the balance breakdown at 4,000. Will it work? I don't know. Well, I wasn't fast enough and it broke down. I was like, fuck, didn't get it. But guess what? It popped right back up to 4,000, 4,001. I hit submit real quick, took me right in, and it balanced for a little bit and then it dropped. The reason I took that trade is because it looks so clear to me. And if it looks so clear to me, it brings me back to the other points. Compare this trade to all the garbage trades I've taken. Like, how good does this trade going to look? I know when that thing breaks, it's going to break. So at some point, it's going all the way down to the bias confirming zone. I need to take that trade. I have to get involved with that trade. And that's what reignited me to get back in the market when I was pretty much done for the day. And then once I was engaged in the market, I saw it was coming down to the bias confirming zone yet again. And I filtered out, I filtered out the range, and the range expected. Oh, this is what I also do too, not to jump around. I take notes on the first hour range and the RTH range, the overnight, the 24. So let's say it's at 130% relative volume. I take notes of all the ranges the next day of the previous day. So if I look at the market and I'm like, okay, it's at 120% range, or I'm sorry, 120% relative volume. I look at my notes and I go, okay, so at 120% volume, my range is like right here at 110 points. The maximum is 112 points. So that told me that I wanted to take this trade at the very back of the zone, and I put my stop below the next zone. It didn't work. The idea was right. It stopped me out. But but when I saw the breakout bar, and it was pretty clear, it took out some of these small balances that I think AB talked about yesterday. He did talk about it. So it took out some of the areas. I got involved again. So I got re-involved right away, and it ended up working out, and I took it all the way to like 85. And I know it was kind of a crazy move. I know AB didn't like that move. According to his recap, I know Nick didn't like it. The things I had going for me was the market would have to break a new RTH range to go more downside, which it eventually did, but it was still kind of like, I just didn't feel like that was going to happen. And it had to make that RTH new range by breaking a bias confirming zone, which has been the balance for 3 days. It was a strong support. So it's balancing for 3 days. It's been hit multiple times. I just didn't think it was going to break. And if it broke, so what? It's a -1R, right? But if it held, it was going to give me another 2 or 3 R, which I think that play gave me 2.5 R. So again, I'm thinking of probabilities. It's coming down. It's coming down with, I don't know, maybe 100 points coming straight down, very little balancing. And it's coming down to the same bias confirming zone with the RTH range holding. I just had more things to me. So that's where I got aggressive. I get aggressive where I have so much going for me. At one point, I'll go for it. And if it doesn't work, it doesn't work. It's a -1R. I move on to the next trade. So I do get the first hour ranges and the RTH ranges to the relative volume. I mean, you guys can start tomorrow by start logging in the volume that you see, every day and log in the ranges. And that way, I mean, it helps me in the mornings a lot. When the market opens at 6:30, I start seeing where the market is and where it can go. And then I look at the volume and then I can compare it. Okay, if it hits here, that's going to hit the average range of the first hour for 100% relative volume, or if it's 80% relative volume, this is the range. It's 30 points. So it's going to hit here and it's going to hit here. If I have confluence of a zone in that area, I'm going to take the trade because that's great, right? That's the average of the range. You have confluence of a nice zone. It has to be a good zone. And it's just, I think that'll help a lot of the traders kind of like, before that's, was it 7:30 my time? It's 7:30 p.m. Pacific Standard Time. So it's that first hour. One thing that I know would help other traders too, because I've kind of been talking to them, and I know Nick does the same thing, is AB just mentioned this, I don't know, 2 days ago, I think at a coaching webinar. But on days like today where you have time frame alignment, even with just one time frame, like if it was just intermediate was bearish, he mentioned taking the resistance areas at front of zone. And that kind of just stuck with me, going front of zone on the resistance. And if it's bearish, then you would take middle back zones on the supports, right? If you flip that, if you're bullish, we would go middle to back of zone in the resistance, and we would go front of zone in the support. So like this idea, I know some guys miss this at the bias confirming zone at 39.60 because because it was a high momentum play. You had tons of momentum going up, so they took it middle or back of the zone, which is fine. But you have to look at the bigger idea. The bigger idea is failure, right? You have time frame alignment, and supposedly it's gonna fail at one of these zones. So if you're taking at the middle or back of the zone, why are you doing that with a bias confirming zone? Yeah, you have momentum going. Are you looking for a tradable reaction? Because that's not the idea. Even if you're looking for a pseudo tradable reaction down to the 39.17 area where the VWAP was that was a huge support area. You had 24-hour VWAP, 24-hour mid, you had the regular mid, you had all this going for that. So you could have just taken the trade from 39.60 all the way down to 39.17. Why would you take middle of the zone or back of the zone? You would miss the entire move. So those are the things that you have to look at and go, okay, just maybe, figure out where your targets are and what the larger idea is. If you're looking for a tradable reaction, okay, fine. Take it, middle, back of the zone, but just keep in mind, this is a bias confirming zone. Bias confirming zones, usually with the time frame alignment, you got to take in the front of the zone of a resistance area. I think I covered everything. Yeah, I think I covered everything. I don't know. Do you have any questions, AB?
That was great. I mean, I do see a question here from Shibs, and it's about what you just actually talked about, which is front of zone, back of zone, because that's like a consistent issue or challenge that I see, right? It's like, well, okay, we have the zones, but do I short front? Do I short back? Do I go mid? And I've talked about it many times, but I think people would love to hear from you. How do you resolve it? I think you've already given the answer, but if you want
Yeah,
to
I mean,
elaborate or provide anything
yeah,
else,
Shiv,
feel
I'm
free.
I'm a I'm a middle to back of the zone guy. I'm more of a middle zone guy, so I understand missing trades. The only reason I hate front of the zone trades. The only reason I took it at bull bear zone is if you did the mentorship in Open Trader, that is the rule. You have to take it front of the zone. So on bias confirming zones, large time frame zones, bull bear zones, those are number one auto trades. Number two, front of the zones. If you don't want to take it in front of, like for instance, the bias confirming at 39.60, that was a larger idea of failure right there, right? The larger idea that it was going to fail right there, and it could possibly get to either the 39.27 area, which is a fib 61, or the 39.17 at the very, the very most 39.17, where you had all that support. If you're looking at that, and that's like, I don't know, like a 40-point move, why are you messing with it at middle of zone or back of zone when you're trying to secure like a 2 or 3 hour play? It doesn't matter if you go middle of zone, because you risk missing the play at middle of zone or back of zone on a bias confirming zone. And the rule that you take it on a middle, with momentum against it, it doesn't apply with, at least, and I could be wrong, I'm just saying for me, it doesn't apply with a bias confirming zone. Bias confirming zones, large time frame, you take it there.
No, you're right. And I mean, if you look at, where the move started, I mean, if you go to a 1 minute chart, you can get kind of too into the weeds. That's why, I think the 5 minute chart works really well as far as identifying trade setups or opportunities. So, looking at the 5 minute chart, I mean, the move really originates down here. Like it goes up,
Right.
there's a little bit of a response. That's not balancing. That's just a little reaction. That's not considered. See,
Right.
this is balancing, right?
Right.
But this is not balancing. This is just goes up, pokes down, goes up again. I consider that to be one swing. So if we measure this swing, I mean, the market's really going from this swing low up into this swing high, right? And like you said, if it's a bias confirming zone, then we need to put that idea aside of, oh, we're going against momentum, so we have to secure a better location. I mean, the idea is that when you're going against momentum, you have to secure good location. Good location. The zone itself is great location, so you don't have to go middle because the zone itself is so good, right? Um,
Right.
if it was a minor zone, then you would go, kind of, oh, if I'm going against momentum, let me get better location. An example of that would be, maybe something like a zone over here, or possibly even initial resistance when the market's putting in an opening range breakout. Okay, going against momentum, initial resistance is good, but is it a bias confirming zone? No. Is it bias affecting? Not even that, right? There's no notation at initial resistance that says break and hold above equals even intraday bullish, right? No effect on bias if that zone gets taken out. So you really have to understand, like, hey, what type of zone am I working with? And then take that into account and make that determination of, okay, what makes sense? And all of these things can actually be quite systematic, right? Like these questions can be pre-answered before the market even opens. And then that just speeds up your real-time market reads. If you've done the prep ahead of the open, like you were talking about how, you're already thinking like, hey, I'm going to short here, here, and here. Well, if you've already made that decision, then your real-time market read is going to be better and it's going to be faster. And you're going to have a higher chance of actually getting that trade. One other question I see here is Jeff is asking, does Ed use scale outs? And if so, are they set at like -1R or sorry, at 1R scale out, or are they based on other zones or location?
So I do use scale outs. Before, I didn't like scale outs. I was like Radovan. I was an all in, all out guy. But I would miss some big moves. I mean, it was frustrating. But I just started using scale outs probably about maybe 3 or 4 months ago. And I will say, I was talking to AB about this. I've become more profitable in the last, I'd say, 4 months, maybe really like 3 months. So I do like scale outs. As far as like how much do I risk, like a -1R?
No, no, it's not. It's not -1R. What the question was: are you scaling out automatically at 1R, or are you looking for more even on the scale outs?
Oh, yeah, yeah. Okay, so the first scale out is always 1R, unless there's another level like a VWAP that I want to hit or something else. But usually it's always a 1R, and that goes to my position. So I'm taking if there's something in front of it, like if there's confluence of like the mid, like the 24-hour mid and the 24-hour VWAP, and kind of like below the zone, if I'm going to short it, then that's my first target. And so that would determine whether I go middle zone, back of zone. I know that doesn't answer your question; it's the other guy's question, but I'm just telling you that would determine my entry. So to answer your question, Jeff, I do scale out at 1R. And then my second position would be something that I would do like an all-out trade, all in, all-out trade. So that's how I base my second trade, but for the second target. But the second target should be, you know, a target, not like an arbitrary number, but a target that is going to go in the opposite direction. So what I mean by that, like today, you know, like I liked, for me at least, I like my second target at 39, around 39.30, I think was the target. And that was at around 38%. And that was also at the top of initial resistance. So, you know, hindsight, I'm looking at that and, you know, could have I've gone lower? Yeah, because, you know, it broke that balance and it was in the middle of that balance. So I could have held. Um, but you know, setting targets is rough. I mean, I even struggle with that too. I mean, Nick, you know, he actually helped. He guided me. He told me to hold and hold and hold, all the way down to like the 3,900 level, because I was prepared to leave my entire position at 39.17, which was just, you know, heavy. In my opinion, was heavy support. But the market, you know, bounced off there and it just eventually broke, which told me once it broke that level that this thing is going. And so, you know, I think everyone's different in their you know, setting their targets. But again, you know, I came from the all in, all out methodology. So for me, my second target's always that, you know, where's a legitimate chance that I'm, you know, 70% chance that my target's going to get filled on that second one. And the third one is always like, I don't throw it out there. The third one, you know, my runner, I don't really like just put it in an arbitrary number where I'm just going to, you know, just try to hit a home run. It's got to be another area where I can talk about it to somebody else and be like, the reason why I think it's going to go here is because of this. So I hope that helps.
Hmm. Another question from Mutu saying, does Ed use Vulcan Trader? And if so, does he use the suggested middle or back of the zone entries that Vulcan automatically recommends, or that it sets?
Yes, on both. I use Vulcan Trader, and you know, I do use. I mean, I'd say like 75% of the times I will use the middle to back of the zones that it suggests. I mean, if it's if I see something like if there's a I don't know, if there's like an HVN somewhere, or if there's a range extension based on a balance area or something like that, then I will adjust it. But I try not to mess with it too much, and I've gotten away from doing that just because I don't want to miss the trade. Um, so you know, I'd say 75% times I stay, you know, with the Vulcan Trader settings.
All right, great. Well, I think you probably have to head out soon, right, Ed? I think we're kind of coming up to.
I move that meeting out.
Okay,
It's
okay, good.
4:30.
All right.
Yeah.
Thanks for taking the time. Let me see if there's any other question here that we can quickly cover. Um, Joe's asking about your experience uh, with trading with a trading partner. Like, how has that helped, or has it does it have its challenges too? Like, what's the kind of the pros and cons of having a trading partner that you're bouncing, ideas off of, and how's that whole thing been for you?
Um, I think it helps if you guys are yin and yang. So if you guys have different strengths and different weaknesses, I think that can help. I mean, we're just starting kind of do that. We were just texting each other before, and you know, now we're on a call, and now, you know, like I'm just calling a play, and whether he takes it or not, you know, it's up to him. But you know, so far so good. I mean, today was good. Today was actually our first day on the phone. I mean, we've been on the phone many times, but actually live trading on the phone, and it worked out well. You know, whether you know your trading partner wants to take that trade or not. You know, I remember trading with him. You know, we were texting, and he took a play, and you know, I would just take a play with him because I didn't want to leave him by himself with that trade. So luckily it did work. So, I mean, I think where it can really hold you back is if your partner does take a trade and you miss that trade. I know that can mess with you, because I know it's done it to both Nick and I. Um, but Nick's amazing at making reads. I don't pretend myself to even be on his level. He's just really good at it. I'm good at it, but he sees things quicker. But even before him and I started trading, I would still make reads, and I would try to make my execution simple by the things I just talked about. So, if you do have a trading partner, make sure he's basically at almost at your equal. And I think a trading partner does help in one way. It's seeing, because there's so many things like AB just talked about. There's so many things to see during trading, right? There's like balance area breakouts. There's range extensions. There's the V. There's so many little things to look at. Some of the times he'll see things that I don't see that normally I do see, and then there's things I point out that normally he sees that he doesn't see. And so now you're having two people cover all these little things. You have a better chance at covering everything. Whether you take the same trades or not, that's entirely up to you guys. I know me and Nick don't. But I think Nick is going to start to, according to Nick. But, my style is just a little bit more aggressive, which it didn't, I would say a couple months ago, or a couple weeks ago, actually, I wasn't so aggressive with my trades. And it was AB who made me more aggressive. It was his recaps and his coaching webinars that kind of flipped the switch on me and started taking more trades, and me taking notes on the trades that I would miss. After a week, after 2 weeks, I would be up a monumental amount of R's compared to my reality R's. So I kind of put it in my head that when I see a trade, if I think about it, I take it. If it just comes in my head, and because a lot of times if it comes in your head and you don't act on it, sometimes it can be late. And I've had a lot of screen time over the years. I joined EminiPlayer back in 2012. Haven't been actively trading like I am right now, but I think I've had enough screen time where I have a pulse of like where and what things are going to happen. I'm not perfect by any means. I'm still not at AB's level, but I can see things now, and I go, okay, this is a good shorting opportunity. I'm going to take it, and like 70% of the times I'm right. So if I wrote down those journal notes and they're like that, then it just made me think like I need to get aggressive with those trades. So if it just pops in my head, take it immediately. And if it doesn't work out, it's a -1R. But if it does work out, it's that delta value, right? The 2-3R that you could possibly getting.
Yeah, so I think that a couple of things stand out. One is that um, you want to partner with someone who sees the market through the same lens that you do, right? So, for example,
Yeah.
if Ed's trading, the open trader or the methodology that we talk about every day, and then he partners up with someone who is trading a completely different methodology, that's probably not going to work, right? There's going to be too much friction and too big of a disconnect. So you do want to find someone, if you're going to use or work with a trading partner, someone who is also using the same method and looks at the market in a similar way, because the challenge of having a trading partner, and this goes back to what Ed said earlier too, is that you also want to be kind of at similar levels, right? Like you don't want a partner where the other person is a complete newbie and you're quite experienced, because that's too big of a disconnect, and it's not going to be a mutually beneficial relationship, right? So you want to be at a similar level, and at the same time you need to have, I think, enough confidence in your own abilities that you can at times go against your trading partner, and there's no
Mm-hmm.
friction because of that. Because I mean, Ed's more aggressive, he might take a trade that Nick doesn't agree with, or maybe just not at that point in time. And each person has to be confident enough in their own abilities, and then also have enough accountability and personal responsibility that, hey, your trades are yours, right? Like I might be saying something
Right.
here, I might be talking about something, but when it comes to execution, like it's all you, right? And each person has to know that so there's no resentment between the two. Otherwise, it's not going to be a long-lived partnership, and it's going to probably fall apart in a week or two. Or as soon as the environment changes and you guys end up taking a couple of losses, then it's very easy to be like, oh well, I would have done it differently if I wasn't on this call right now. So
Right. I mean, you gotta know what AB just mentioned. It's a personal responsibility. So if I take a trade and I lose because of Nick's recommendation or vice versa, I'm the one that clicked. I'm the one that executed the trade. So ultimately it's my responsibility. And I'll tell you what, like it's this high. I know it sounds weird, but 50% of the trades we don't agree with. I mean, we'll like our trades are completely different. So having a trading partner doesn't mean you're gonna take the same trades. I even mentioned to him, I'm like, dude, I'll call it trades, just take my trades. And Nick's like, no, I'm not gonna do that. I go, it's just because I don't agree with those trades. I'm like, it's true, but what I think you have to use if you're gonna use a trading partner, you want to use it to read the market. And if you guys agree, great. You agree.
all right, Ed, I think maybe your AirPods are finally giving out.
Yeah, you're on speaker now.
Hey, it's okay actually, even on speaker. It's
Yeah, I told you,
yeah,
AB.
it's fine. Well, hey, I told you let's test it, right? You're like, oh, AirPods are fine. So
Yeah, but what I was saying earlier, but as long as your partner is reading the same market as you are, I think that like me and Nick don't read the market differently. We read it the same. Like we see the same balance areas, we see the same resistance. We make our morning reads like, hey, do you like this area? I like this area. We're in agreement with a lot of different things, which I like. We're just not in agreement with the trades. So, but if you have the same market reads, you see the same extensions, you see the same levels, that will help you because you will be able to cover more things with two eyes and two heads.
yeah, no, well said. Jeff just posted a comment here saying, my wife and I used to talk about our trades and market reads in real time. Now we just trade in quiet and review the day after it's done. It's much healthier.
Totally. I agree. I wouldn't do that with the wife.
Exactly. Okay, so I think that covers much of it. Just trying to see if there's anything else. No, I think we're good. I think we should probably this is I think a good cutoff point. I think we're already probably over an hour into this,
Yeah,
right?
we
Yeah,
are.
we're like an hour and 10 into this. And if it ends up being, 2 hours, I think it's going to be too much.
Yeah,
So
yeah, you'll
let's
lose them.
keep it digestible, right? I mean, even
Right,
having
right,
someone sit
exactly.
down and watch an hour and 10 video is a challenge. So, let's keep it digestible. But hey, Ed, thanks so much for taking the
Yeah,
time. And hopefully we can do this again in the future. It was a lot of fun.
yeah, yeah. I appreciate it. I had a lot of fun too, guys. Take care.
All right, guys. Take care, and we'll catch up again tomorrow morning. Bye.